Assalamualaikum. Um, I am Jamshaid. I'm a veteran cost and management accountant. I had my professional qualification since 1999. So it's almost about more than 22 years. Uh, Now, I have already described you the task I have been doing in my working life. Now, I give you some of the examples of my financial modeling. These are few examples, and according to the circumstances and needs of the environment, uh, I can mold these or make the new models, financial models for the requirements of the situation and the KPIs they require and the data they can give. And according to those requirements, I can form and make the financial model. So let's see the financial models which I have already prepared. These are only few financial models. I have been preparing many financial models. Now, first of all, I show you the latest financial model of financial analysis of the Islamic banks, which I carried out on the requirement of an international development agency. For the sake of confidentiality of the client, I won't declare the names of the client or the names of the banks, and I'll try my best to maintain the confidentiality. But the emphasis will be to show the procedures, the methodology I have applied, so that you are confident of my work style. So let's see. Now, this is the financial model in Excel. There are uh, 5 sheets. This is the final banking scorecard, a balance scorecard, and this is the input sheet where the values have been input. This is some principles on which uh, the main principles of the international agency on which this analysis is based. And these are the criteria aspects, and these are the here some workings have been made for the to derive these figures. So let's first of all see the balance scorecard. Uh, we have taken the 4 areas which are relevance. Relevance means how much the investee in which the investor is going to invest, how much the investment in the investee is relevant to the scope of the investor. I mean, the investor didn't have the scope of earning profits only. It had the social aspects also. So we want to check how much his intention, his objectives are being met by this investment. And this is an important aspect in the investment ethics also. We have to regard the requirements of the investor, the types of investments he want to maintain, which also includes his social values and uh, objectives. Like if someone doesn't want to invest in a company making alcoholic drinks or cigarettes or things like that, then we regard his principles, his moral values, and we don't invest in those areas which he doesn't want to support by his investment. So first of all, within the relevance, there are 4 subsidiary aspects, which are aligned with the vision, goals, and objective of the investor. And secondly, relevant to the investee. Relevant to the investee means did investee really had the appetite for this investment? Did he want, was his sustenance depending on this investment or not? So relevant of the investee has also been checked. And thirdly, the work quality at the entry. Work quality at the entry means uh, was analysis carried out before making the investment in this firm or bank. That means whenever you are going to make investment in some firm, in some company, you make an analysis of its different financial ratios, like its solvency ratios, its investment ratios, its profitability ratios, and blah blah. So, was there any work quality at the entry made or not? So this is also a sub-aspect of the relevance, and then responsive to IB or industry, which means is the bank in which investment is being made, is it responsive to the industrial promotion of the industry, development of the industry? That means uh, does he make contributions to the association, like if it is a bank, does it make contribution to bankers association, and does it conduct research which is for the public utility, or does it give lectures and for the general public, for the all industry or not? Does it hold the seminars, etc., etc.? So this shows his responsiveness to the industry as a whole. So these were the four aspects which were checked, and um, then the next column is the points. Points, the user can change the values here. These points will show the significance of the factor in the overall score. That means if you give the one number to this aspect, so its significance is in this whole relevance aspect is 22%. Its share in the total score of the relevance, and the share of the relevance in overall total score is 25%, which will be shown later below at the end of this worksheet. And like if you increase this number, the share of this aspect will increase in this total. That means if you make it 2, the total will become 5.5, and 2 over 5.5 will become 36%. So importance of this score, this aspect will become 36% in the score of the relevance, and the other importance will decrease comparatively or proportionately. And next are the, let we revert this to the original. Next are the four columns of the four levels of the score, which is score 3, score 2, score 1, and score 0. For score 3 is the alignment highly relevant, or just relevant, or partly relevant, or irrelevant. If it is highly relevant, then we will assign 3 score to this aspect, which is the maximum score, highest score. And if it is just relevant, then we will assign 2 score, which is the second highest. And if it is a partly relevant, then we will assign 1 score. And if it is irrelevant, then we will assign 0 score. That is what it means. And in the relevance to the investee, these scores have been associated to these attributes. Like if it's first Islamic bank in that country, or this bank needed investment for the bailout, then it is highly relevant for this investee bank, and then a 3 score will be assigned. And if it is strategically important for the investee bank, then 2 will be assigned. And if it is important for financial closure, then 1 will be assigned. And if none of these factors are present in this analysis, then 0 will be assigned. And then comes the uh, work quality. Was the work quality at the time of entry? That means, was any analysis, financial analysis made at the time of the entry, financial analysis or other analysis, like quality analysis, quality of the management, quality of the human resource. So there can be different aspects before the investment. Some investor is going to make investment in any business. Not only the financial analyses are made, qualitative analyses are also made. So was the analysis highly satisfactory or just satisfactory or partly satisfactory or unsatisfactory? Accordingly, the scores of 3, 2, 1, 0 will be assigned. And this is the fourth and last factor in the relevance, which is responsive to the IB or industry. Is the investee bank responsive to the industry as a whole? Does he contributes to the industry, or to promote the importance of the Islamic banking in the society? That is he working in that direction or not? So for that we have 4 attributes: responsive, uh, investee bank, Islamic banking or industry, and both, or responsive to the Islamic banking only, responsive most of the time, and not responsive. And accordingly, the scores are assigned from 3 to the level, from 3 to 0. And how these scores have been arrived, there is a input sheet in which the data has been entered in the same corresponding rows. Here we had made a research of the investee bank and found that like this bank, ATPB is highly relevant, MBL is also highly relevant in this aspect of was aligned. This bank like ATPB, MBL, KTB, there are about 15 banks. For all those banks of the world, the Islamic banks of the world, we had conducted research and put the data of these attributes. And accordingly, then from this data, the formula was put here to derive the value according to the attributes present. So this is the formula which was put here to check the value which has been given in the input sheet, and then assign the relevant score to the attribute. So accordingly, these scores 3 to 1 were assigned. So, and in the next major aspect, the efficiency aspect. Efficiency means the financial efficiency, profitability, and management, etc. So in this, we had checked that these aspects like average return on equity of the last 5 years, and ROE compared to the industry average ROE, and expenditure ratio, average cost divided by income. Average cost of the bank mainly includes the salaries and the depreciations, etc. While the income is means the uh, total interest earned or profit received in case of Islamic banks from the advances which have been lent by the bank, plus some commissions, income, etc. So this is the expense ratio, and here we have given the ranges, limits of those expense ratios. Uh, and according to these limits, the score of 3, 2, 1, and 0 were assigned. For example, uh, as the expense a better is better if it is minimum, if it is lesser is better. So if the expense is 40% or below, then score of 3 is assigned. If it is below 60%, but above 40%, that means between 40 and 60%, then the score of 2 is assigned. And if it is between 60 and 70%, then the score of 1 is assigned. And if it is above 70%, then score of 0 is assigned. And for the ROE, higher is better. So if ROE is 15% or above, then score of 3. If ROE is between 15 to 10%, then 2. And if it is between 10 to 6%, then score of 1. And if it is below 6%, then score of 0. So accordingly, these scores were assigned based on the values of we have found in the banks. Like average ROE of ATBB is 7%, of MBL is 22%. So MBL has very high return on equity, while ATPB has a comparatively low return on equity. So its scores taken into the balanced scorecard for will be according to their values. Which ATPB, it is 2 derivations. I cannot mention the full names because I want to maintain the confidentiality of the client. Confidentiality is a very essential aspect or quality of accounting profession or investment profession. Then in the efficiency, next factor is revenue. Average spread. Spread is the revenue of the bank. Spread means interest received minus interest paid. Received from the borrowers and interest paid to the depositors. This is the net spread. What has been the average spread, and these are the limits on which the scores have been signed. And so on, there are other factors like effectiveness and these are geographic contribution to the financial inclusion means what is the deposit growth, what is the market share, what is the customer financing growth of the bank. The higher is the better. And what are the number of branches, and where the industry overall branches are available, what is the ratio proportion of this bank's branches in the total industry, and if this bank has been given any awards or certifications, what is the CSR policy, what is the tax contribution to the government exchequer, and are there any reverse linkages? Reverse linkages means do the banks also cooperate with each other for the promotion of the banking industry? And are they up to date with the developing technology? That means do they have digital banking? Is their website is useful in sense of allowing online statements, online banking, online account opening, etc., and information of branches, information of ATMs? Mobile app, do they give the mobile app? Do they offer the ATM services, credit card services? So these are up to date with the latest technology of the banking. Then the capital market capacity, which means have they ever contributed to any project of capital market, like issuance of sukuk for the government and things like that. Then the final fourth aspect is sustainability. Uh, Within that is the good governance. Uh, i- i- is the good governance present in this bank? Uh, if it is listed, then it's better. If is unlisted, then the good governance is little doubtful, because unlisted banks don't conduct audits, and they are not so open. So their rules, principles, and their way of doing business may have some doubts as compared to the listed bank, which is annually audited and thoroughly during the year also audited, because the public has investment in this organization. And then are there independent directors in their board? And is there diversity of directors in the board? That means there are qualified directors, educated directors, and experienced directors in the board from the different areas of the business industries. What is the total relevant experience of the directors, and is the board evaluation is also conducted? Uh, that means the board members' resumes and their performance is submitted to the central bank for their assurance and for their certification or not. Are the duties and roles assigned to the directors? And what is the qualification of professional qualification of the chief executive of the bank? And what is the experience of the chief executive of the bank? So these factors have importance in the sustainability and going forward, or going forward aspect of the bank in which the investor is going to invest. And so on. And there is a controlling group. Due to time limitation, I can't explain each and everything, but I'm just explaining you the methodology. So after all this, we have given this much significance to each aspect, these four aspects. Like relevance has been given the significance of 17% in the total score of 100%. Efficiency has been given the 30%. Effectiveness also 17%, and sustainability 35%. So of this, each bank has scored out of 17%, this 12, MBL 13%, and so on, 12% for KTPB. And its total score is 66%, 86%, 79%. Then on the base of the total score, overall score, if it is above 75%, then A grade will be assigned to the bank. And if it is above 60% but below 75%, then B grade will be assigned to the bank, investment grade. And so on for 45 to 60, C, and for below 45, D will be assigned to the investee bank, investment grade. So accordingly, according to their score, if this is 66%, and this bank has been assigned B investment grade, and in the relevance it scored B, in the efficiency it scored D, In the effectiveness, it scored B, and in the sustainability, it scored A. Its overall score was B. And this analysis, this is the final essence of the analysis. So this was provided to the investor to take its decision whether he should hold the investment or sell the investment or invest more in the debt investee bank or not. So these are the three decisions on which he has to act according to the information. And for a passive investor, usually they take the decision of holding the investment. And for the active investor, they take the decision either of buying more investment or selling the investment. So an active investor is also is always looking for the selling or buying. He seldom stay contented on just holding the investment. So this was the model of the balance scorecard for investment evaluation of the Islamic banks world over. In the same banks, we had also made some more analysis for each and every bank. It's a DuPont analysis. We had entered the figures from the financial statement, from the audited financial statement and annual reports of the banks. And then we calculated different ratios which were compiled into the CAMEL ratios, DuPont ratios. And then we presented it for the user, the management, the decision makers to take the decisions according to the values and financial ratios. So let's see what has been given in it. This is the first screen of the dashboard. Here we have given the DuPont analysis. In DuPont analysis, return on equity has been divided into leverage, asset turnover, and net profit margin. If we multiply these three factors, this will give us the return on equity. And then is the return on assets, then spread. Spread, as I had already told you, it is the um, interest received less the interest paid, because the interest is the main income of the business of the bank. So it is like a gross profit of the bank, similar to the gross profit of the manufacturing business or trading business. And then is the NPL. NPL is also very important in the banking business. NPL is the bad debt ratio, the risk factor of how many debtors will default in the payment. So NPL is very important for the banks. We have also mentioned the NPL of each bank. And then are the deposits and loans. Deposits are the lifeblood of the bank. So deposit is important figure, loans which the bank has advanced. So this gives the gross business of the volume of the business of the bank. And then are the investments. After loans, the main asset of the business is investment in the marketable investment into the government treasury bills or term finance certificates and other bonds like that. And then are the total assets and then equity. And finally, in the last line is the credit rating. So credit rating of the bank is also very important. That gives assurance to the depositors to hold their deposits in that bank. On the top is the brief uh, geographical location and uh, figures in totals, like the country of this bank has been deleted because I want to maintain the confidentiality. uh, Regions, and then continent, and then the listing status. Is it listed or unlisted? Because listed status is also very important. If the bank is listed, then it is conscious of the audit requirements and the rules and regulations of the country, because it is checked every year by the auditors. It is also checked by the central bank for compliance of the banking rules. So listed entity becomes more conscious than the unlisted, and they are more ruly in the compliance of the rules and regulations. And then what was the total investment of this development agency for which we are conducting this research? And this is in the dollars. And what was the initial investment date? This gives idea for how many years uh, this investment development agency is uh, keeping the investment in this bank. And then is if any disinvestment has been made during this time span, and what is the since inception internal rate of return, and what were the dividends received in total. This is also in dollars millions. And what is the IRR? This is IRR in the dollars, and this is IRR in the local currency. And what is the closing value of the investment, and what is the funding source? Funding source is the fund which has been invested into the bank. For example, if it is the pension fund, or if it is some endowment fund, uh, what was the source of fund which has been invested in the bank? Because every source of fund has its own investment policy, its own risk profile, and other features which has to be considered before investing into any security. So its investment source is OCR. OCR is their general fund, general revenue surpluses. Sorry, I don't remember exactly the full name of this abbreviation, but this is, generally speaking, this is the general fund of their surplus funds. The next screen are the ratios. These are the CAMEL ratios. In CAMEL, C is for the capital adequacy, which mainly include the car capital adequacy ratio, and then is the asset quality. In asset quality, we give the non-performing loans ratio, and then is the management. In the management, we give the CASA. CASA is current and saving account ratio to the total deposits or payables. And also in the management, we give the expense ratios, which is operating expenses plus provision, depreciation, and NPL provision divided by the total assets. And then net spread divided by the operating expenses. Net spread is, I have already told, it is the income received, interest income received less the interest paid. It is like a gross profit of manufacturing business. Then is the earning, E for earning performance, in which we give the return on assets and return on equity and spread ratio. Then is the L for liquidity, last letter, which in which we give the liquidity ratios: liquid assets to total asset, liquid assets to total deposits, liquid asset to short-term liabilities, financing to deposits. So from here, the investor can see the uh, performance or status of the bank. Uh, Not only the ratios of the banks have been given, that specific bank, but also its industrial overall figures have also been given. For example, if this bank is from Saudi Arab, then the total industrial Islamic banks totals have been taken from the central bank statistics, and those figures have also been given. And this is the value. These figures have been taken from. In this, we have uh, recorded the values from the annual reports of the balance sheet figures and the profit loss account figures, uh, on which the ratios are based, which we have already shown. The investment and deposits with the institutions, liquid assets, financing and advances, risk-weighted assets, the total deposits, fixed deposits, total liabilities, tier 1 capital, tier 2 capital. In tier 1 and tier 2 capital, the detail has also been given. Tier 1 is the simple equity, which is paid up capital plus the reserves. And tier 2 is the uh, long-term bonds which have been issued to compensate the uh, shortage or deficit of the deficiency of the capital, and also the revaluation reserves. Uh, then is the financing subject to NPLs. This means the financing on which NPLs has been calculated, which have been risk assessed, and the amount of NPL on those loans or financing, and the provision of NPL. This is the actual expenditure which comes in the profit loss account, and this is the provision which comes in the balance sheet. This is in fact the cumulative figure of NPLs. And then the likewise income statement figures. So that is how we prepare the individual model of each bank analysis for the perusal of the investor. So they can make the invest in a more detailed decision based on more detailed information, and they can also be confident that the final summarized figures have been uh, calculated uh, uh, after uh, working and actual figures are based on the actual figures, and these final summarized figures are uh, have not been arbitrarily given, but they are rather based on detailed working and calculations and records. So that's all on the financial models of the banking analysis. Thank you very much.